Ladies and gentlemen, good day and welcome to earnings conference call of Indian Metals and Ferro Alloys Limited, arranged by Veritas Reputation. At this moment, all participant lines are in the listen-only mode. Later, we will conduct a question and answer session. At that time, if you have a question, please press star and 1 on your touchtone keypad. Please note that this conference is being recorded. I now hand the conference over to Mr. Aryan Rana from Veritas Reputation. Thank you, and over to you, sir.
Thank you, Shubham. Good evening once again, everyone. On behalf of Indian Metals and Ferro Alloys Limited, I welcome you all to the Q1 FY2026 earnings conference call. We appreciate your time and interest in joining us today to discuss the company's financial performance for the quarter ended June 30, 2025. Following the opening remarks by our management, we will open the floor for a Q&A session. Kindly keep your questions concise and relevant to allow broader participation. IMFA, India's leading fully integrated producer of ferro alloys, has demonstrated significant improvement and resilience in Q1 FY2026 despite ongoing market challenges. This performance underscores the company's focus on operational excellence, disciplined execution, and long-term value creation. The financial results and investor presentations are available on our website and have been filed with the stock exchanges for your reference. Before we begin, I would like to remind you that some of the statements made in today's discussion may be forward-looking in nature. These are based on the company's current expectations and are based on subject to various risks and uncertainties that could cause actual outcomes to differ materially. Joining us on today's call are, and I welcome Mr. Vijayananda Mohapatra, Full-Time Director and Chief Operating Officer of the company, Mr. Sonak Gupta, Chief Financial Officer, Mr. Binoy Agarwala, Head Power Business Unit, Mr. Sandeep Mahade, Head Business Mines Unit, Mr. Captain Suresh Prabhuji, Head Ferro Alloys Business Unit, and Mr. Venkatesh, Head of Sales and Marketing for the Ferro Alloys Business Unit. With that, I would now like to hand over the call to Mr. Sonak Gupta, our Chief Financial Officer, for the update on financial performance and overview. Over to you, sir. Thank you.
Thank you, Aryan. Good afternoon, everyone. I welcome all of you to IMFA's Q1 FY2026 earnings call, and I thank all of you for joining the call. The highlights of Q1 FY2026 results were our revenue and margins have sequentially improved over previous quarter, primarily driven by the ferrochrome price pickup, along with our cost optimization and operational efficiency improvement initiatives. Our greenfield ferrochrome expansion project in Kalinganagar is on track with our execution plan. Simultaneously, the underground Sukinda mines expansion is progressing as per our schedule. The construction work in our 120 KLD ethanol project in Ferroville has also commenced in Q1, and we are in track to commission the plant by Q4 FY2026. Our financial position as on June 25 end continues to be robust with net debt-free balance sheet. Our focus will continue to be on operational efficiencies, improvement, further cost optimizations, and closely monitoring the capacity expansion built on the company's financial strength and integrated business model. I'll keep it short, and I thank you once again for your valuable time and support. We look forward for your questions and insight. Over to the moderator to open the floor for question and answer.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Josh from 7 Seas. Please go ahead.
Binoy, I would like to understand the ratio between renewable energy and captive power, thermal power. From our last concall, I understand that 25% renewable power enables us to use 75% thermal power. So 25-75 ratio Is it a ratio of Government of India or it's a European ratio?
No,
Renewable
actually,
power versus thermal, yes.
actually, as for the guidelines from MOP, each year they have kept some REC obligation. That is, this year 25-26, they have kept 33.01% of REC obligation trajectory.
Okay.
But as for our availability of thermal power plant and as for our requirement of RE renewal, that is the ratio for 75-25. There is no guidelines for 75-25.
Right. Okay. Okay. Now, ferrochrome produced by using this kind of power mix, is it called this a green ferrochrome, or that has to be produced by totally renewable power? So green ferrochrome, what is definition? How it is produced?
Suppose my ferrochrome production power requirement is 100 megawatt. I'm just giving you an example.
Sure.
And out of which 25% is renewable and 75% is thermal. Then your 25% is your green product. You have used 25% of renewable energy for your product. And your 25% will be accounted for your green product, not 100%.
Okay. Thank you.
Thank you. The next question comes from the line of Gautam Rajesh from Everflow Partners. Please go ahead.
Hi, sir. Thank you for the opportunity. I have two questions. My first question was in terms of a cost of production. How does our production cost compare versus global peers in China, South Africa, and I believe Kazakhstan as well? So how would our cost of production compare among these three countries and the peers there?
Suresh, you will take
Yes. So you are asking about our price compared to the other countries?
Yes.
Like China and Europe. So we are better compared to the China and many countries. Only some few countries which are faring better than us is like Kazakhstan, that is producing at a lower price than us.
What about South Africa?
South Africa price is also high because of their present problem of power prices. They are facing
because of the telecom thing, right?
Electricity charges are hiked by around, in the last 2 decades, it is around 950%, and recently they have hiked by 12.5%. So, and also availability of the power is a problem there. So that is the main reason for the cost competitiveness problem of South Africa.
Can you give a rough percentage? How much more cheaper are we compared to China, and how much more expensive is Kazakhstan compared to us? Is there a rough sense of percentage you can give us?
At present, I can't able to give the right picture, but we are better compared to other countries except Kazakh and a few more Asian countries like Kazakh and other. Turkey is also little bit better compared to our prices.
And would these better be by single digits or double digits, sir?
Single digits.
I don't think we will be in a position because of the volatility in the market and the price, the changes as well as the forex. So geopolitical situation, we may not be having the current situation. So I think that exactness we are not maintaining.
Understood. And my next question was, once the new capacity comes on board, how will this change our current cost of production?
So once our capacity comes into, means you were saying Kalinganagar project?
Yes.
So when the Kalinganagar project comes into operations, like the first one is in June 26, yes, and September 26 is the second furnace when it gets operational. So initially, obviously, there will be the teething issues which may come in operational. It will take time to fully get scaled up. But at the full scaled up level, it will be the cost will be what we expect. Other than the inflationary matter, it will be more or less similar to the current level what we are maintaining. Duly adjusted with the whatever is escalation. But we can't comment much on something which will happen after 1.5 years. In the current...
No, my understanding was these facilities are more equipped. So would we have more operating leverage or efficiency here? So would we see improvement in cost of production post that?
Suresh, if you can add on.
Yeah, the cost of the production will be in the similar line. Only the logistic advantage we may get at Kalinganagar. Otherwise, the efficiency and the operation parameters will be the similar in line.
Is there like a quantum you can give me for logistic advantage by any chance?
Oh, it will be slightly. At this moment, we can't tell those
Understood.
prices. Yes.
And sir, not by numbers, are we significantly more cheaper than China or just by a hairline?
Yeah, substantially we are at a better price. We are picking
Substantial. At least by double digit. Okay, thank you, sir.
Thank you. Before we move to the next question, we would like to remind participants you may press star and 1 to ask a question. The next question comes from the line of Pranav Jain from Ageless Capital and Finance. Please go ahead.
Hi everyone. Congratulations for the Q1 numbers, and it's great to see the company come back up with great numbers. My first question is, sir, can you tell us the production numbers for this quarter?
Yeah, just on the production side, overall, just a minute, I will just tell you the numbers. Just a minute, yes. Yeah, it is, ferrochrome is 65,929 metric ton, and chrome ore is 103,780 metric ton.
Got it. And sir, what will be our EBITDA cost for this quarter?
It is around 77,500.
Can you give the breakup of it as well?
These are a bit of, I will say, strategic in nature, but primarily if you see our overall, the costs are in line with whatever marginally it has increased from last quarter by about 500 rupees, primarily driven by a little bit of higher chrome ore cost and to some extent the repair and maintenance. We had a planned repair and maintenance. For that, there is a marginal increase in the repair and maintenance cost. These are the two major costs. There has been a slight increase. Otherwise, it is in line with the overall cost structure of ours.
Got it. Sir, looking at your FY25 annual report, I was seeing, sir, in the cost of materials notes, so what does the purchases number include? Is it met coke or is it something else?
Yeah, primarily met coke.
Okay.
Primarily met coke and a little bit of binders like molasses and all.
Got it. And sir, lastly, just a clarification from my end, sir. In the previous con call, it was mentioned that the cost of chrome ore was 7,500 per ton. Is it per ton of ferrochrome or per ton of chrome ore raised?
So it is basically the chrome ore, total chrome ore, landed chrome ore cost.
So that we multiply by 2.35 to get the per ton of ferrochrome price, right?
Yeah, approximately it is about 2.35 to 2.38. It varies.
Got it. Okay, that's all from my end. Thanks a lot and all the best.
Thank you. The next question comes from the line of Madhur Chaturvedi from MAIQ Capital. Please go ahead.
Hello everyone, good evening. Congratulations sir on a good quarter in a difficult environment, but exceptionally done sir. So just one question, so just to clarify, how much ore did we raise this quarter, sir?
So Sandeep, you can just clarify that out.
Yeah. This in Q1 we have raised about 104,000 tons of ore.
104,000 tons. And so how would that compare to Q1 last year?
It
what
was
was the
last quarter, Q4 or Q1 of last year, 5?
Sir, either one, whichever number you have handy, if you have both.
It was about 220,000.
Got it. And this is mostly attributable to the monsoon?
It's attributable to two, three things. Monsoon is the number one because this year monsoon is almost 3 weeks earlier. Generally, it comes on 15th of June, but it started in the last week of May. And also we are having enough stock at our plants and also mine also. About more than 4 months stock at plants and more than 2 months stock at mines. That's the reason.
Got it. Got it. And this is in anticipation of the Kalinganagar expansion coming on next year.
So what we will do, we'll ramp up our production as per requirement from Q3 and in Q3.
Got it, sir. Thank you, sir. All from my end.
Thank you. The next question comes from the line of Vinayak Kariwal from Exponent Tribe. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, I wanted to understand the domestic capacity on the ferrochrome and the chrome ore side. So if you could give an overview to us would be very helpful. Because as per my understanding, we would be one of the largest private chrome ore miners in the country. Because even Tata has closed one of their Sukinda mines and they have submitted the documents for giving up the Sukinda mine. So could you please explain us how is the domestic scenario playing currently?
Suresh, you will take that.
Yes. You are talking about the domestic capacity. Last year, it is around 1.325 million tons. And most of the smelters are non-operational. And now also the figure will be less than that. We are forecasting the production levels in this year will be less. So the capacity utilization is less in this year. The similar kind of figures will come around 1.25 to 1.3 million tons.
So this you're talking about the ferrochrome or the chrome ore?
Ferrochrome. Chrome ore is around 3.3 million tons production per annum.
And so who would be the biggest chrome ore miner in the country? Let's say if you talk about the private player, would we be the biggest chrome ore miner private player in the country?
Yes.
Sure. And the public player who is the biggest is the Odisha mining company.
OMC, yes, Odisha Mining Corporation.
Yeah. So how much chrome ore do they produce in the year?
So OMC figures at present I do not have, but that is they are published in the Steel Mint. You can see those figures.
Okay. So my second question was on the line of if you could give us an understanding of the value-added products, like the products we do. Do we do any value-added products like few players are talking about low silicon ferrochrome, which is used in special steels. So are there any value-added products in our product segment?
Yeah. We have started to produce these niche products from the month of January. We are producing a low silicon, low phosphorus products with high chromium alloy.
Okay, sir. So could you give us a percentage of the total production? How much we are doing this? How much would it ramp up?
Very small amount we are producing. Around 15,000 of production we are making for this niche segment.
Sure. Thank you, sir.
It is around 5 to 6% of our total capacity.
Thank you.
Thank you. The next question comes from the line of Dviti from Molecule Ventures. Please go ahead.
Yeah. Hi. Am I audible?
Yes.
Sir, I just wanted to know what was our cost of production for Q1 FY2026 for the quarter?
So EBITDA cost is about 77,500 for the quarter.
Okay. And our power cost for current quarter?
So the power cost, Binoy, you will take it?
Power cost is 5.27 rupees. Total cost.
Versus for Q1 FY25?
Q1 25, it was 4.97, 4 rupees 97 paisa.
Okay. And if you could give a breakup of coal and coke cost for the current quarter?
But you wanted to know the coal cost of Q1 FY26?
Yeah.
That is, coal cost is 2 rupees 68 paisa.
And coke?
So more or less it is in line with our cost. So it keeps more or less in the range of around 2.7, is 2.68. So the main thing which is that our variable cost is 4 rupees 3 paisa and total cost is 5 rupees 27 paisa for the quarter.
Okay. And sir, so I just wanted to know that what is our current cost of raising ore and how it is expected to change when we transition to underground mining for both our mines. So I wanted to understand how it will add up in our operating cost.
So Sandeep, you will take this?
So right now our raising cost is about 3,000 rupees together of both the mines, and definitely it will increase when we go fully underground. So as of now, I cannot give the exact number of what will be the cost then, but it will increase.
Any percentage that you can specify?
No, actually it depends upon the type of mining we'll be doing, and there are many things that we are not sure of right now. So that's why I cannot say the exact number.
Okay, sure. Thank you.
Thank you. A reminder
So
to all
just to add, the whole expansion plan for the mines will continue to about 4 to 5 years. Okay, so at this point, predicting the overall final cost for raising will be a bit of a challenge. So that's what Sandeep was mentioning.
Thank you. A reminder to all participants, if you wish to ask a question, you may press star and 1. The next question comes from the line of Jainam Madrecha from KC Capital. Please go ahead.
Hello. Thank you for giving me the opportunity. So my question was on the line of last 4-5 years, we have seen the EBITDA per ton going up massively from the previous historical averages. So is it just because of the realization growth, or we had some operating leverage as well? And on top of that, if it was an operating leverage thing, on what line items are we getting the operating leverage?
So basically, if we see for the last 1 year, our costs of EBITDA cost has remained in the range of around 77,500 only, plus minus 500. Primarily over here, as you know, the input cost to a larger extent, the met coke cost has to a larger extent reduced. But at the same time, some of the other operational cost and all has also to some extent gone up. But we continue to maintain a lot of cost efficiencies, specifically if you see our power cost. Power cost, we have done a lot of operating efficiencies, including our various operation costs related to the ferrochrome production. There also we have spent a lot of initiatives to improve our operating efficiency. So it is a mixture of our input cost to some extent coming down, driven by the cost optimization efficiencies that we have done. But at the same time, even for the imports, the met coke imports, there is exposure to the forex fluctuation, and you would have seen that for the few years from around 78 level, the currencies have gone up to 87 levels. So that also has to some extent impact on the overall cost. So there are multiple factors, but more or less we keep a very close monitor of our cost, alternative cost opportunities, as well as the operating efficiencies to keep the overall cost of EBITDA to around 77,500.
Okay. And if let's say in future met coke prices go up, are we going to go back to like earlier EBITDA per ton levels, or we would be maintaining this levels?
It will be very difficult to say because I say it's a factor of many other costs, not just the met coke cost, coal cost and all. So overall, the impact can be only measured after we see what is the trend coming on all the input cost. So it's very difficult to predict for the future. But currently, we are seeing a stability in the cost structure. So you have seen over the last 2 quarters and this quarter also, we have maintained our cost around 77,500, means between 77 to 77,800, 900. So that we are expecting currently also the cost to remain in this level. But with the current geopolitical volatility, it is very difficult to predict anything for the future.
Understood. And just another question on the industry perspective, like how are we seeing the Chinese ferrochrome producers? Are any new capacities coming up, or they have just like cut down the production levels? We know the production levels are down, but are there any plans in future for new capacities? And also, how is the stainless steel supply demand over there? Because that would be the end part that would be driving the pricing over there. So what's the scenario over there?
So I'll just give it to Venkatesh to give his insights on that.
Yes. Thank you. Going into China, basically, we are not hearing any more big new capacities in ferrochrome coming up. As far as our knowledge goes, nothing is going to come up in recent times. Going back to the stainless steel industry, in fact, all industries, like Mr. Shaunak said, there is a geopolitical uncertainties. There are so many talks of tariffs, which is keeping the entire industry on tender hooks. So currently, the demand also for stainless steel is weak. And traditionally, if you look at this quarter, which is a monsoon month, both in China and in India, where the demand comes down a little bit. And also in Europe, there's a summer vacation. So from the tariff situation, looking at the economies of various countries on tender hooks, so the demand or the downstream demand of stainless steel is quite challenging at this moment.
Okay, understood. But how is the supply demand currently like? Are we seeing too much oversupply in China market?
I'll just put it in another way to answer your question. Many of us have read that there has been a lot of cutbacks in production in South Africa. I'm talking of ferrochrome production. We see a little bit of reduction of ferrochrome production even in India. When we see these cutbacks, and like I said, the lower downstream demand for stainless steel, this has kind of countered, each other. Otherwise, if the demand was good and there were cutbacks, obviously the prices would have jumped. So this cutbacks in demand and the weakness in downstream demand has kind of balanced the industry as of now.
Understood. And just on last part, ex-China, there are no new capacities coming in. Is it the case that China would be taking in all the ferrochrome for captive use only, or they would be exporting their ferrochromes as well?
As far as China government policy goes, they restrict the exports. There is an export tax on ferrochrome. So their idea is to be kind of self-sufficient or have ferrochrome capacity. But they do the purpose of the government is to discourage exports. So there is a 40% export duty on ferrochrome in China. So there is no question of any ferrochrome being exported out of China.
Okay, understood, sir. Thank you for giving me the opportunity. Thank you, sir.
Thank you. The next question comes from the line of Joe Shah from Seven Seas. Please go ahead.
Yeah. Venkatesh, now I think my question you will be able to answer better way. Now, for the first time in history of South Africa, Glencore and Concall, they asked South African government to levy $100 per ton export tax on chrome ore export. This has happened for the first time. It will help South African government to raise revenue, very important, significant, $3-4 billion, which is very important for them. Now it will lead to the higher cost of production for China by say 20,000 rupees per ton of ferrochrome. And then all the prices of ferrochrome everywhere will go up. And it would be a very, very good windfall for India. So now what is your take about this export tax on in South Africa? This $100 suggested by this Glencore and Samancor. Although this mineral council, they have a habit of opposing this, and South African government is not listening to those mineral council things. Because those people, they just want to make money from export of ore without doing any value addition. So now I want your valued views, please. Thank you.
Yeah. Thank you very much for asking the question. I think so. This was also addressed by our MD during the AGM. It is the same view we had heard of this imposition or planned imposition of export duty around 5 years back. I think so. It was just before COVID, and somehow it fizzled out. On a plain basis, yes, if there is an export tax, cost will go up and all that. What you said is true, but let us wait and see actually what the numbers translate. As you know, and you have rightly said, there is a lot of dependency on South African ore in China. Most of the ore comes in from South Africa. So let's wait and see. It will be too early to speculate right now what is going to be that impact, because we are not just talking of South African government. The Chinese also have a lot of investments in South Africa. You must have heard about that. So we don't know exactly what kind of pressures would come on a governmental level also. So let's wait for the concrete announcement, and then I think let's take it forward.
Venkatesh, my point is, for the first time, not even during COVID time also, this Glencore and Samancor came out with this proposal. This first time these two companies, giant companies in South Africa, they've come out with this proposal to put export tax. So they are as you know, they are heavyweight in South Africa. And government is, South African government, as we know in the past also, they passed a resolution to impose a tax on this ferrochrome, this chrome ore export. Now, this is first time this major chrome ore company, they've come out with this suggestion to impose tax. So then it makes big difference between situation in the past and situation at present. So my take is, now it is South Africa is inclined more towards the imposing of tax, and then that would change the whole dynamics of ferrochrome price in India and internationally. Okay, we'll have to wait for that, but it should not take more than 6 months' time. This is my take about this. Okay.
I agree to the change in dynamics, but let us both wait for the announcement.
Sure. Yeah, definitely. Now, Sandeep, I have some questions for you.
Yeah.
Sandeep Narade. Now, number one, I'm confused. This quarter Q1 FY26, this chrome ore raising has gone down by 50% to about, say, 103,000 tons. If we compare it with Q1 of FY25 monsoon, same area, in FY25 it was 202,000 tons, and Q4 FY25 it was 220,000 tons. So, this time monsoon has arrived 3 weeks early, but it cannot result into 50% reduction in the chrome ore raising. So what is the main reason for this drastic...
So that is what I am saying.
Yes.
Actually, in Q4 of last year, we have produced more than our budget.
Right.
And we built the stock like more than 4 months stock in the plants and more than 2 months stock in the mines.
Right.
And generally, and in the last year, if you will see, the monsoon was quite late. It was not on 15th of June, it was later. And this year, monsoon started in almost by the end of third week, in May itself. So, that was the major reason. So, whatever we are producing and dispatching to the plants, it's as per the requirement of the plants and as per our storage capacity in the plants.
Sure.
So we are having that capacity right now, and I said that we'll ramp up the production in Q3 and Q4. Because from open cast, we are capable enough to ramp up the production.
Sure. Now, one more question. Now, we have been discussing about the critical minerals, exploration of critical minerals. So I want to understand it in more details. Now, the Sukinda Valley, our mining area, is said to have a lot of critical minerals as per the geological survey. So now, in case IMFA wants to export this critical minerals in our own mining area, do we have to take permission of Orissa government, or we can export on our own? And number two, yes.
So in Sukinda Valley, there is nothing like presence of critical minerals. There may be some previous studies like for nickel, and that number is quite very low in percentage, which is not mineable also. And if there is presence of the critical mineral in our own list, even then we will have to take the permission. Exploration we can do without taking the permission, but after that means mining and all those things, we will have to take the permission, because our lease is for mining of chromite ore.
Sure, I understand. And second thing, suppose the Orissa...
Mr. Joe,
Yes.
Maybe request you that you return to the question.
Okay, no problem. Okay, no problem.
Thank you. Ladies and gentlemen, before we move towards the next question, I would like to remind participants you may press star and 1 to ask a question. The next question comes from the line of Naman Bansali from Nine Rivers Capital. Please go ahead.
Hi sir, thank you for the opportunity. I have one question. That in the annual report you have mentioned that incrementally 40% of the capacity that is coming up would be targeted towards the domestic player consumption. So could you help us understand the dynamics of the stainless steel market in India in terms of the current demand supply situations, and how much the stainless steel market is growing at in terms of the demand requirement? I'm asking this given that a business mix is currently almost 90% exports, and that can shift towards 70 to 75% exports if this incremental 40% is used for the domestic consumption. So how should we think about the impact on realizations or the EBITDA margins going forward?
I think Venkatesh, you can take this.
Yeah, I'll take it. I'll try to address your question. Stainless steel in India is growing at a healthy rate of around 6% on CAGR growth. What we are witnessing is there is a slight reduction in ferrochrome production in India, and there is a good domestic requirement. So our focus going ahead with the expansion is to focus on the domestic market and cater to the domestic market. Of course, exports will continue. Your second question was pertaining to, I think so, the realization part. Yeah, that was the realization. See, whether you look at domestic or export, there is a slight lead or a lag, but finally both settle down at similar price levels.
Got it. Thank you.
Thank you. The next question comes from the line of Akhilesh B from an individual investor. Please go ahead.
Yeah, hi. Good afternoon. Thanks for the opportunity. Sir, I have a few questions. The first one was, you mentioned that 5 to 6% of our sales is in the value-added product category. So, is there scope to increase this percentage, and what is the difference in realization compared to the regular trade, and consequent impact on EBITDA margin? These are higher margin products.
No, we could not hear you properly. There was some disturbances. Request if you can repeat your questions once more.
Am I clear now, sir?
Now you're clear.
Yeah, sir, I was saying in a previous answer you mentioned that 5 to 6% of the total sales can be considered as value-added products. So I wanted to know, can this number increase as a percentage of our sales? What is the kind of premium on realization we get for such products, assuming these are higher margin products compared to a regular grade?
Okay. I think I'll take this.
I'll take this. You want to take this?
Anyone. Venkatesh can also.
Okay. So when you look at what we call the niche grade, as Mr. Suresh Babu explained, the market itself is limited, and there are already entrenched players. So going up above 5%, would be kind of difficult at this stage. We're still exploring if we can go up. This product has various categories, so the premium could range all the way from 4,000 rupees a ton till about 20,000 rupees a ton.
Okay. And sir, second thing was you mentioned that in the last 5 years, we have made a lot of progress on cost efficiency, process efficiency. So would like to know where you think we are in this journey, whether there are more gains that are possible to be had on the cost side, on the internal side. I'm not talking about met coke price and coal price, etc., which are outside your control, but within the company, efficiency-wise, do you have certain targets to further improve, or do you think that, we are pretty efficient right now and then no more gains are possible on this one?
So you are talking of the cost efficiency. We could not get your question. Just if you can.
Yeah, you had mentioned that our EBITDA per ton has been going up also because we have done some cost efficiency internally in our company. So I wanted to know whether there is more scope for more efficiency in our internal operations for further gains in EBITDA.
Yes, there are more scope. We are just evaluating it out internally, and that's a continuous process for us. So all the areas related to the conversion process from chromo to ferrochrome, the whole chain, we evaluating now on individual basis. Last financial year, we implemented the ERP Oracle Fusion also in your system. So that's a very high-end ERP system where we can also get a lot of visibility, and that also through digital operation efficiency improvement, further improvement initiatives are being taken to see whatever scope we have from the cost optimization and improving on the operational efficiency. So that's a continuous process which I said in the beginning of the initial statement, and that is also helping us in driving. So there are a lot of actions we are now focusing on to keep ourselves more cost efficient. When the overall in the market the price actually drops, we will see that our margins have been better off compared to our peers. So that's the advantage we are having.
Yeah. So from your position, sir, can you see 1 to 2 percentage points possibility, through efficiency gains in the coming years, or is it? If you can quantify what kind of potential you see in these activities.
So in this, yes, we can. So we are trying to identify currently how much we can improve upon, and that's the main reason. If you see that overall we have maintained our cost quite efficient within that 77,500. But as I said, we do not actually make too much estimation beyond 1 or 2 quarters. So it will be very difficult to say that how much will be the improvement 1 year or 2 years down the line. But definitely we are focused on that way, and that is actually a lot of initiatives have been taken, and we are expecting a lot of positives from that. Currently, it will be very difficult to say whether it will be 1 or 2% or more or less. But definitely, a continuous mechanism has been put in to ensure that we make concerted effort to improve our operating efficiency and find out alternative, I would say, opportunities in our input cost to keep our costs down.
And sir, one last question. We are shifting from open cast completely to underground mining in Sukinda. So, what was the trigger to do this? Because it's going to cost more than it did in open cast. So, was there some regulatory reason that we had to shift, or what was the reason to completely phase out open cast and get into underground?
No, that's anyway the capacity, but I'll.
I will. Yeah. So basically, we do the open cast mining when it is possible to do it technically. It depends upon the depth of the ore body It depends upon the ore from which depth we can get. So that is the basic reason. So we have done the open cast mining till now in band 1, and then we started backfilling now in band 2. We are doing the open cast mining. That will be possible for next about 4 to 5 years. After that, we have to go for underground only. Otherwise, there will be no ore available for our plants. So that is the basic reason. So it's a totally technical mining point of view. We have to go for underground.
Okay. Understood. Yeah. Thank you.
Yeah. Thank you.
Thank you. The next question comes from the line of Manan Mandur from Walmart PMS. Please go ahead.
Thank you so much for the opportunity. So my first question is...
Sorry to interrupt, Mr. Mandur, your voice is very low.
Hello, can you hear me?
Yeah, go ahead.
Yeah. So the first question is, what is the cost of chrome ore and coke per ton in this quarter?
Achha, this one you are trying to say on this. So we had already mentioned that the chrome ore cost is approximately around 8,400 odd for the quarter.
And coke cost, sir?
And coke, though, anyway, we had mentioned that in our total 77,000 cost, the coke is approximately coming out to approximately 14,500 odd.
Okay, 14,500. So, sir, from Q1 till July, are we saying that coke cost has increased or it has decreased? Exactly.
So overall market cost has gone down. Overall, in our EBITDA cost, it has, to some extent, it has decreased.
Okay, so currently the coke cost would be, you are saying, less than 14,500.
When? In future?
Yes, like current prices and, future prices.
So more or less, so the prices, whatever it is, we have got the benefit of it. So currently it will remain in the similar range. At least for this quarter, we expect the prices. But again, there is a lot of forex volatility is there. So we have to see on how the landed cost ends up each quarter 2 ways. But currently the net cost will remain in the similar range.
Okay. And the last question is that the total 21 crore of other income, in that is the 7 crore of Utkal fee also included?
Pardon? I could not get it.
Out of the total 21 crores of other income, is the 7 crores of Utkal fee also included?
Yes. So the surplus or the compensation which we got from Utkal Coal, that is also there in this. So currently we are having about 915 crores of total amount of surplus, including internal accruals. So the return of the investment that adds up to that amount, which is approximately 21 crores.
Okay. Thank you so much. That's it from me.
Thank you. The next question comes from the line of Joe Shah from 7 Seas. Please go ahead.
Yeah. Vijayanand, now I think whatever is happening with Tata Steel is very important for us. Number one, they've surrendered this very important Sukinda mine, and they got the notice of 1,902 crore rupees from Odisha government, to pay the penalty for the raising of less ore. So now they are continuing with the Mithrimal and Mohanty mine. There also they have to pay same 95% premium. So they are also, Tata Steel entirely is becoming unviable. And I understand that the ferrochrome production has gone down from 50,000 tons per month to just 15,000 tons. And that also they are thinking of getting out of ferrochrome business. So that will give us very good opportunity in 2 ways. Number one, we'll get some asset buying opportunities. Our management has been saying that we look forward to the inorganic growth. And number two, so asset inorganic growth opportunity we'll get. And number two, the Indian domestic market, when it is improving, it has started improving and becoming bigger. IMFA will be probably the only supplier in India. So maybe we'll be getting more of a price premium in Indian market. So that also be able to see. So I would like to know your views on this. Vijayanand, yes.
Yeah. So one thing that Sukinda Mines Tata is surrendering, that is the only one thing that they cannot go for further open cast mining. So they have to go for underground. That's why they are surrendering.
Okay.
So we cannot go for that one. Okay.
Right.
The second one, they are coming out for this one. We don't know for the timing. We know if any opportunity comes, we'll say that we'll report.
No, but they will reduce the ferrochrome production from 50,000 tons to just 15,000 tons. 35,000 tons per month they will reduce. So that is giving us good strength to IMFA.
Yeah, that's what whatever our capacity is there, we are employing the maximum. Okay.
Sure.
And we are adding the Kalinganagar, but Kalinganagar will take time. That also,
right.
That's where Suresh Babu and Venkatesh told that we are focusing for the Indian market.
Sure. Yeah. Okay. Thank you. Yeah.
Thank you, sir.
Thank you. The last question for the day comes from the line of Vinit Thakur from Plus 91. Please go ahead.
First what and second phase.
Hello, Mr. Thakur, your line is unmuted. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, could you throw some light on the strategic rationale behind IMFA's acquisition of Metallics Aviation, and how do you see it complementing your existing business operations?
So, on the Metallic Aviations, which is a 100% subsidiary just we have opened up, it is basically IMFA has certain helicopters, aircrafts, which is primarily used for its own business purposes, to go to the mines or the Tirupati plant and all. So, to make our balance sheet, the core assets are to be kept in the IMFA. The ones which are not directly linked to the IMFA business, we are just restructuring it and moving it to the separate company. So that is the overall rationale behind that. So the company
okay, sir. Thank you.
After that.
Got it, sir. Thank you so
Now
much.
we are waiting for the DGCA. We have made the application to DGCA, and it takes about 6 months to 1 year to get the final approval to move the assets.
Okay, sir. Thank you.
Thank you. The next question comes from the line of Vinay Kariwal from Exponent Tribe. Please go ahead.
Hi, sir. Thank you for the opportunity. So, I wanted to understand, we have a stainless steel capacity in the domestic market of 7.5 million to 8 million tons. And let's say if 60 to 70% of that is utilized, so 5 million tons of stainless steel is being produced in the country every year. So I just wanted to understand, do we have enough ferrochrome capacity in the country so that we could fulfill the stainless steel production demand, and how much how much of this capacity is actually being used in the domestic market versus being exported?
I think Venkatesh, you will take this call.
Yeah, sure. You are right in terms of the capacity, stainless steel capacity in India, about 7 million tons. And the actual production is around 4 million tons. The requirement of ferrochrome would also depend on the scrap usage by these stainless steel mills. So when you really look at, I'll just address it in a different manner. When you look at India's ferrochrome production, like Mr. Suresh Babu had mentioned a little earlier, hovering at around 1.3 million tons. And roughly about half of the ferrochrome is consumed domestically and half is exported. So in case the stainless steel capacity utilization improves, there is a strong demand for stainless steel. Obviously, then what you see is the exports coming down and more and more gets consumed, ferrochrome gets consumed domestically. So we to address it in another manner, is we have the capacity to meet the requirements of the domestic stainless steel manufacturers.
So that is what my question is, because looking at the dynamics, I think we have a lot of ferrochrome being imported in the country for fulfilling our stainless steel production. So our capacity, which is 90% being exported. So in that dynamics, I guess we have a lot bigger opportunity on the domestic side if we see going further, because also one of the participants mentioned lots of ferrochrome capacities are being closed down in the country, and we being the largest producer of chrome ore and also one of the largest in ferrochrome. So how do you see the domestic and export share going forward, like 2-3 years down the line?
Yeah, to address, there was the first point which you made, that ferrochrome getting imported into the country. There's very limited ferrochrome which gets imported into our country. There could be certain grades of ferrochrome which may come in depending on the requirement for that manufacturing that grade of stainless steel. There could be some imports coming in, but it is no big imports which come in. And to address the second question, we have already addressed it, saying that once the expansion comes up, our focus will be more on the domestic market. So I think that addresses your question.
Yes. So could you give a share of revenue, if you have in mind, where could the dynamics go from here?
It is a very evolving and dynamic market. So once let the expansion come in, let's do the domestic, and then we can really work out on the share of export versus domestic. But for sure, the direction is going to be more domestic, less of exports as far as the expansion comes. So overall, when we look at a ratio of 90-10, that's going to change drastically.
Sure. And so one last question on the prices of chrome ore waste. So I was tracking, and there was the last quarter, the chrome ore prices which we mentioned was 7,500, and this month we are mentioning it as 8,400. So how does this fluctuation comes in the chrome ore price, because that is a captive thing which we have?
So actually, on the chrome ore price, compared to the last quarter and this quarter, as we said, due to the monsoon and early coming of the monsoon, the production was lower. But there were some semi-variable costs also in that, which is usually loaded to the overall cost. So that's why the average cost for the quarter has slightly increased. But one should always look into the total annualized value of the chrome ore prices to get a overall sense of how the prices.
So you are saying that they are range bound normally, and they don't fluctuate much because of any other factors which we don't know.
No, chrome ore actually would be primarily driven by the average will be on the production cost, and whatever is our decline cost which we have, all those expenses taken into account. But more or less it remains in line with our what is the total spend we have done and what is the average production we have got from the quarter. So if the production is slightly low, then obviously the average cost tends to be slightly higher. If the production is higher, like in quarter 4, the production was quite high, so the cost was slightly lower. But more or less, it is in the range of 8,000 to 9,000 rupees. Last 1 year, if you have noticed.
Sure. Thanks for the clarification. That helps a lot. Thank you so much.
Thank you.
Thank you. Thank you.
The next question comes from the line of Gautam Rajesh from Everflow Partners. Please go ahead.
Hi, sir. Sir, one follow-up question. Like Tata is shutting down their wanting to go their mines because you mentioned because you want to go underground and all that. So what gives us the surety that when we are spending this much money on going underground with our mines, that the cost won't completely go up, that all our cost advantage goes off? Because a huge company like Tata, which would have scale and capex of a greater extent, is also shutting down. What is the idea behind that?
Sandeep, you will take that?
Yeah. So what happens, you have to plan early for going underground. Like we are having one underground mine, Mahagiri mine. So we started quite earlier. Now we are heading for 6 lakh tons in next 1 or 2 years. Same is with our Sukinda mine. It's now we are running open cast and simultaneously we are going for underground. So more than 1 year we have started for this underground project, and we are doing all our development for decline, ventilation shafts and shaft. So this is how we have to do. When you are talking about Tata, they are planning for underground since last 20 years, but they have done nothing. And in between there was their lease was also over, and then again auction was done. There are so many reasons for them.
Understood. And sir, also that I just want to clarify, we do not, India as a country do not import any ferrochrome, right?
We import minimal, I said. If there are certain grades, special grades of stainless steel if somebody requires, and India has a particular standard grade of ferrochrome being manufactured, then there is some imports.
Understood.
Not like a regular imports, what I mean to say.
Okay. Understood.
Thank you. As there are no further questions from the participants, I would now like to hand the conference over to Mr. Abhishek Sawant from Veritas Reputation. Thank you, and over to you, sir.
Before Abhishek, I want to thank all of you who have congratulated our results, and I also want to thank all of you for your very insightful questions and participating today. So thanks for it, and over to Abhishek.
Yes. Thank you, Shama. Thank you to everyone who joined us today and participated in the discussion. We appreciate your questions and continued interest in IMFA. As always, we remain committed to transparent communication and delivering long-term value to all our stakeholders. In closing, on behalf of the Board of Directors and Management, we thank you all for your participation in this call today. IMFA remains focused on operational excellence, financial prudence, and long-term value creation. Should you have any further questions, please feel free to reach out to us. Look forward to engaging with you again in our future updates. Have a good evening and stay safe.
Thank you. On behalf of India Metals Ferro Alloys and Veritas Reputation, that concludes this conference. Thank you for joining us, and you may now disconnect your line. Thank you.
Thank you.